It is 12 o'clock and wanted to say good afternoon and welcome to another installment of our ongoing nonprofit leadership and engagement education series. I am Joanne Nazer, Manager of Nonprofit Leadership and Engagement at the Washington County Community Foundation. Thank you for joining us today to learn from our content expert about government mandated reporting for nonprofits. This session is being recorded and will be posted to the Washington County Community Foundation website under the Nonprofit Leadership and Engagement section. If you have any questions during the presentation, you may enter those into the chat. Time permitting, we will also have a Q&A session at the end of the presentation. Follow-up questions after today's session may be emailed to the foundation at allocations.wccf.net. Our presenter's bio and her photo are on the WCCF website, so I am pleased to introduce Attorney Rebecca Bowman.
All right. As I mentioned in a little bit ahead of time, this presentation will leave you with a group of tasks. I hope they do not make you want to curl up in the fetal position and cry, but we'll see what we can do to make things as clear as possible. When running a nonprofit organization, you need to know what filings are required and what best practices are necessary to maintain your nonprofit corporation and federal tax exempt status and the right to solicit. So there are actually 3 comments in that statement. One of them, well, 4. One of them is you need to maintain your corporation. One of them is you need to maintain your nonprofit status. One of them is you need to maintain your tax exempt status. And the 4th one is you need to maintain the right to solicit. Now, there are some exceptions to the second 3, but the first one is critical. You've got to maintain your corporation. So we're going to start there. Nonprofits have to meet a whole range of federal, state, and local requirements. Now, the local ones are less in play, although there are some counties in Pennsylvania that have different requirements from the overall state requirements or additional requirements. So make certain that you know if there are any requirements that are unique to your county. Nonprofits are held to an unusually high standard of government regulation and public scrutiny, but that makes sense because 501c nonprofits are exempt from federal corporate taxes, and 501c nonprofits may have access to public funding. So the higher standard has to be sort of artificially imposed on the construct because you're not in the process of routinely filing corporate tax returns. And so that data isn't collected in any other way. So nonprofits do have unique sets of regulations that apply to them so that they are participating fully in disclosure. Now, the benefits that come with being a 501c nonprofit are typically not available to for-profit businesses. So laws are in place to protect the public and ensure that nonprofits do not abuse their special financial privileges. And there are 3 ways that happens. One of them is scams, unfortunately. So there are guides and fences and corrals in place to make sure that legitimate nonprofits can be relied upon and that fake nonprofits can be weeded out and shut down. Then you also have the exemption from a variety of taxes, and you have access to public funding. You may have access to public funding depending on the work that you're doing. So while a 501c nonprofit does receive key financial benefits, the penalties for failing to meet the government requirements can be very serious. Properly filing a Form 990 each year prevents the IRS from revoking a nonprofit's tax exemption and protects them from fines that can accrue daily. So there are 2 possible things going on. Once you've achieved your nonprofit recognition from the IRS. And that's part of your initial formation activities. Once you've received that validation, they can revoke it, and if you don't comply with the requirements. Now, there are multiple different kinds of 990s. We're going to take a look at what those are toward the end. And the timing is set by the IRS. The fines that can accrue daily are not insubstantial, but the worst outcome would be revocation of a tax exemption. Now, not only is that a problem for the organization, but if your nonprofit status should be revoked, then none of the donations you received following that revocation are eligible for a tax deduction. And that can be a significant factor for your donors. So it's not just your organization that is affected if a tax exemption is revoked. It's also the status of the donations with respect to the donors. Excuse me. Took me a second there. Now, I have talked to a couple of nonprofits who were set up to be nonprofits, and they chose not to pursue tax exemption. And they chose not to engage in any of the reporting. They file a corporate income tax return, and their strategic goal is to break even every year or have only an investment account or whatever. But they've chosen not to do it because they're afraid of screwing it up. It's complex, but it's not that bad. And there are some pretty significant benefits, especially if the nonprofit happens to own real estate. The exemption from the real estate taxes is a huge benefit. And generally, you cannot capture that if you're a tenant, because your landlord can't capture it, and therefore you can't negotiate that benefit be passed on to you. There is a high level of interest, I would say, in revoking real estate tax exemptions for local jurisdictions. And the premise is that the nonprofit wants to have police protection, fire protection, sanitary services, water services, power, all of the benefits that are provided through the municipality or associated authorities. And that if they're exempt from the taxes that generate the revenue to pay for those services, they're getting something that they ought to be paying for. Whether they're exempt from the larger real estate tax, school district or county, there's not so much impetus for that. But there is a fairly strong level of activity in terms of seeking to undo the tax exemption at the municipal and authority level. The murmurs swell and subside and swell and subside. So I don't know if it'll ever get any traction. I mean, we can't even get charter school reform. But just to give you a heads up that is out. Okay, so organizations have to demonstrate good standing with the State Corporation Bureau and charitable solicitation authorities when applying for grant funding and corporate sponsorship. Now, the grant funding part is, I'm using that term from a public standpoint. So the public funds being granted, that's obvious. You have to maintain your good standing. Corporate sponsorship is a little more honor system. If you persuade a corporation to sponsor some activity or sponsor the organization in a larger sense, they will be motivated by the tax deduction. They will be motivated by the positive correlation between what that corporation does and what you're doing. They will be motivated by a service motivation. They're probably not going to ask for a good standing certificate. It's not high on their priority list. However, if they ask and you don't have it, then you're in a bad way. You've just in one fell swoop demolished that relationship that you work so hard to build. So I'm going to give a little piece of advice. This is not a registration requirement, but it is something I recommend. I recommend that you maintain a registered agent with a Pennsylvania street address. And the registered agent, and if you work with for-profit corporations, you're very familiar with that, especially if they're foreign to Pennsylvania. But the registered agent is responsible for receiving legal documents like service of process. Why that's particularly relevant for nonprofits is that there is often very high turnover in officers and directors in nonprofits. And if you have not maintained your records, the state may send forms, notices, invoices, warnings, whatever, to people who are no longer affiliated with the organization, who have died, who have retired and moved to Arizona, a wide variety of reasons that the people they have on record may be wrong. So it's rather than put a burden on yourself to make sure that that's updated every time there's a change, it is often easier, more reliable to hire a registered agent to be the point of contact for service of process. It's not a requirement. It's not even a recommendation from the Commonwealth. And that's a recommendation from me. It just takes one thing off your plate. At this instant, there is no Pennsylvania annual or decennial report required. The Decennial Report was repealed in 2022, and there will be new requirements starting in 2025. But the annual report has been off the table for a while, but the Decennial Report jumped up and trapped a whole lot of nonprofits because every 10 years, I mean, you might have gone through 5, 6, 7, even 10 different boards of directors in that time frame. And so it's hard, and maybe a different executive director or multiple different executive directors. So it's hard to keep track of when 10 years ago was. And I have had nonprofits call me and say, oh my gosh, I got this notice that my nonprofit has been revoked. And worse, if your nonprofit status is revoked at the Commonwealth level, you can reinstate it. But until you do, in that gap period, someone else could take your name. Now, if you've got a funky name, that may not be a problem. But if you have a name somebody else really wants to use, they may be keeping a very close watch. And if your status gets revoked, they may hop in there and grab that name. And then when you go to reinstate, you got to come up with a new name, you got to rebrand, and that's really not something you want to do. So the Decennial Report was repealed in 2022, I believe in part because it absolutely caused more trouble than it was worth. An annual report we can all wrap our heads around. So there will be an annual report beginning next year. We don't have any forms yet, but we do know from the Commonwealth what you're going to have to report. So the annual report requirement begins in 25, and here's what you have to provide. Business name, fair enough. Jurisdiction of formation. Now, that's going to matter if you're a domestic nonprofit, if you are a foreign nonprofit registered in another state. And it may matter, we don't know yet, but they may want to know what county you were registered in. So you're gonna have to pay attention to that. It's more likely to be based on your state registration, so the county wouldn't matter, but it's not impossible. Registered office address. Now that would be maybe if you don't have a registered agent. If you have a registered agent, that would be the registered office address. If you don't have a registered agent, you may have, for example, the home address of the president of the board. I've seen that fairly often. And that's not going to be the principal office of the mission or ministry or nonprofit. So you're going to have the name of one or more officers or directors, the names and titles of the principal officers, the address of the principal office, and the Pennsylvania Department of State entity number. Now, I know a lot of nonprofits have no idea what their Pennsylvania Department of State entity number is. So you have a year and a half to figure it out. So make sure you have that ready to go. There is no fee for nonprofit corporations, and June 30th will be the filing deadline for nonprofits. Now, what happens if you don't? Well, failure to file the annual report will subject the association organization to administrative dissolution, termination, cancellation of the name, dissolution, termination, cancellation. That's all kind of one thing, and loss of the protection of its name. Because this is a new requirement, the legislature has mandated that there'd be no enforcement actions taken in 2025 or 2026. You'll have to file it. You will get a notice if you don't file it, but you're not going to get punished. But enforcement will begin, and that would be July 1st of 2027. The Decennial Report is gone for as long as it stays gone. My guess is with this annual report, the Decennial Report will stay gone, which is fine by me. That was a pain. But that's where we are today. So Pennsylvania Annual Report requirement begins June 30th of 25 will be your first due date. And so I would expect an annual report form to be distributed no later than the 1st of January. Might be sooner. It's going to be awkward if it's later because people will be getting ready to file things. So we'll see how that goes. Okay. That's the status of the Pennsylvania Annual Report. You also, if you are tax exempt, you need to file your Pennsylvania sales tax exemption renewal. That is done with Form 72, and it is renewed every 5 years, and there is no fee. Just like the report that's going to start in 25, if you don't file it, you lose your tax exempt, your Pennsylvania sales tax exemption. I have had a fair number of nonprofits who choose not to bother with the Pennsylvania sales tax exemption because they don't buy a big volume of stuff. For example, if you're distributing meals or you're distributing food, you're going to have pretty high expenditures in pursuit of your work. But there are other kinds of ministries where there may not be significant expenditures for stuff. And so I've had nonprofits that chose not to pursue the sales tax exemption. But if you have it, you want to renew it in a timely fashion, you can renew it online, and that's Rev for Department of Revenue, Rev 72. You need to have an updated certificate. And by the way, if you don't want to keep track of when 5 years is, the certificate that you got has an expiration date on it. So you don't have to remember or make a note. It's right on the certificate when it expires. So you want to get that in at least 3 months before it expires, because you do not want to be a gap, sort of like having a passport renewal. You do not want to wait till the last minute because you could get caught without one. Pennsylvania sales tax exemption renewal, you want to keep track of that. Now, the original sales tax exemption application should have been a part of your entity formation back at the beginning of your nonprofit life. So that's a piece of the overall formation process. There is a Pennsylvania form that has to be filed mostly. And there is the purely public charity law, and that's what we're going to look at next. And here is the breakdown. An institution of purely public charity receiving or claiming exemption from Pennsylvania property or sales tax must annually file, 1, the IPPC, Institution of Purely Public Charity, registration statement. It calls for a $15 fee, and it requires a copy of the IRS Form 990 for the most recently completed fiscal year. That has to be filed with the Charitable Organizations Division within 135 days of its most recently completed fiscal year. The IPP, they don't call it an IPPC, it's called the IPP. That recently became electronically fileable, which is very helpful. It's a fillable PDF. You can save it down. I think it's 13 pages of instructions, something like that. Really a big deal. And 135 days is a little bit of a weird number. So you're going to want to mark that down because it's aligned with 135 days from the end of your fiscal year. Now, if you're a calendar year, 135 days is easy. If you're on a fiscal year, whether that's June 30th or October 31st, or some other date, you'll need to keep track of what 135 days beyond that is, because that's the time window for filing your IPP. And I put on the screen there the website address for that particular form, including all of its instructions. But that's option number one. Option number two is you may be exempt from registration. And we'll take a look at that in a minute. Or you file a charitable organization registration statement, and that's a BCO 10. And that can also be filed electronically. So the BCO 10 has a checklist for registration, and I like checklists. They make me feel safe because I can go down and check off and make sure I have everything. And the registration checklist for the BCO 10, this is not the IPP list, just the BCO 10, is a completed registration statement, that's the form, properly signed and dated, a copy of the 990 that you filed. That could be a 990, a 990 EZ, which is sort of like a 1040 EZ. It's just, you don't do much, so you've got a nice basic form. The 990 PF for private foundations, and the 990N. And you have to provide a copy of that return along with all the required schedules, and it has to be signed and dated by an authorized officer. Now, that's really not, that item is not a big deal. You've already filed it, unless you're somehow exempt. You've already filed it. It's already been signed and dated by an authorized officer. What can be tight, though, is keep an eye on that time frame. So you've got to have a copy of your 990. If the organization doesn't have to file a 990 for some reason, then you have to file the public disclosure form, which is BCO 23. The website I provided you is the BCO 10. If you go back one step to documents, the whole list of documents will come up. BCO 23 is on that list. I do not believe you can file the BCO electronically, but you can file it as a PDF attachment to the BCO 10. You have to have your applicable financial statements attached. You have to pay the registration fee and any late filing fees. And the first time you file a BCO 10, you have to include your IRS determination letter, the articles of incorporation or charter, and your bylaws. So you have already filed articles of incorporation with the Commonwealth, but they want a copy attached to the BCO 10 because it's going to a different place. All right, so here are the BCO 10 fees and requirements. A 162.7A organization, that 162.7 subsection A lists some people who are under circumstances where they do not have to file additional forms. In general, the most common one is subsection 2, which is organizations that solicit only among their own members, and membership is not determined by the making of a donation. So if that's the nature of your organization, then you can fall under 162.7A. Still have to file a BCO 10, but you get the reduced registration fee. and you don't have to provide any financial statements. Now, as I was putting this together, I thought, I'm going to be really clever. PowerPoint is oriented landscape. I'm going to merge these two tables. I don't know why there are two tables, and it'll be 3 columns and very cool. And yeah. Well, when I got to doing that, I discovered that the breakdowns are different. The breakdown pricing for the registration fee is different from the breakdown pricing for the types of financial statement breakdown for the types of financial statements required. Not really sure why that's a benefit to anybody, but it is what it is. So 162.7A organizations pay a $15 registration fee and do not have to file any financial statements. Gross annual contributions, that's national. Gross annual contributions of 25,000 or less, registration fee is $15, and you do have to provide financial statements that are internally prepared, compiled, reviewed, or audited. If you have revenue between $25,001 and $100,000, the registration fee is $100, but you still get the pretty casual financial statement requirement, internally prepared, compiled, reviewed, or audited. If you have gross annual contributions, it should be 100,001 to less than 500,000. The registration fee is 150. And at that point, we now deviate. They no longer align. So in terms of financial statements, it's 100,000 should be 1 to less than 250,000, which is different from the registration fee breakdown. You must have an externally compiled, reviewed, or audited financial statement. And from here on, we don't line up at all. For 250,000, the next category of fee is greater than 500,000. The fee is $250. But we have 2 more breakdowns in the financial statements. Between $250,001 in gross annual contributions or less than 750,000, it must be externally reviewed or audited. Same fee, but if your gross annual contributions are 750,000 or more, you have to provide an audited financial statement. Now, frankly, I don't think that's too much to ask. If you're running around with $750,000 per year, you should be doing audited financial statements anyway. Now, what I do see, though, is that nonprofits will keep an eye on that 25,000. You're a 1-person, 2-person, self-performing nonprofit if your gross annual contributions are $25,000 or less. And you're certainly not going to make that breakdown based on whether you have to pay $85 more or not. But I have seen nonprofits that actually keep an eye on that because they want it to be small and personal and maybe completely volunteer, no staff. And so they're not looking for large amounts of money. It may be a purely personal service. For example, you provide rides to bring homebound seniors to a fellowship event. You don't charge them. You don't get any money. It's purely an act of charity from your part. There's 6 or 7 of you, and you organize who's going to which neighborhood to pick up which homebound people, that kind of thing. So you may not have more than $25,000 in donations, but you also have very small scope and impact. And there's nothing wrong with that. Personal service is a beautiful thing. I wish more people had servants' hearts to do service work like that. But that's the breakdown. I did not do the research to find out where those number breakdowns came from. I'm really kind of surprised that the fee has to have been Commonwealth set. The financial statement requirement may have been set from an external source, but gee whiz, just make them align already. This is the list. Now I'm going to go back just a second here. Remember number 2, unless exempt from registration. Well, here is the list of who's exempt from registration. And it could either be exclusion or exemption but in any case, it means you don't have to file. So here they are, and there are 2 pages of them, so be patient. We may or may not get to what you're doing, but this is what you need to know. Organizations of law enforcement personnel, firefighters, or other persons who protect the public safety. Yay. And their stated purpose in solicitations must not include any benefit to any person outside the actual active membership of the organization. So you can solicit outside, but it cannot benefit a person who's not a member. Now, think about a firefighter. Some tragedy occurs. The organization decides they're going to have a fundraiser for the people whose house is burned down, but that person's not a firefighter. So that would be to benefit someone outside the actual active membership of the organization. Religious institutions and separate groups, corporations, which form integral parts of religious institutions.
Why don't we give Rebecca a break for a second and just review. There is a question here that talking about registered agent. I just wanted to share that the foundation has run into that situation previously, that we had sent some information to a nonprofit we had thought was current, and it wasn't. And it took a while to get that resolved, to find the right person. And so I think organizations want to avoid that. And so I
Yes.
think registered agent is kind of a new term probably for our nonprofits. Or you just wanted to give you a little breather there, Rebecca, if you want to
Thank
handle
you so
that or
much.
continue going.
Mhm. Thank you. Yeah, the registered agent concept is something that for-profit corporations have used for a long time, especially foreign to Pennsylvania for-profit corporations, because they have to have a registered agent. Domestic Pennsylvania corporations may have a registered agent because they have a number of branch offices, or they have a whole bunch of subsidiaries, or for a wide variety of reasons. But it is something a nonprofit really needs to think about, because the turnover in a nonprofit is frequently much higher than the turnover in a for-profit corporation. So,
is there a form to be filled out, or how is it to be registered?
well, it actually doesn't quite work like that. A registered agent is a company or a person that you hire to accept service. And there are a whole bunch of companies that do that. I have the most experience with CT Corporation, but there have to be 50 in Pennsylvania. So it's not hard. You can just do a search on corporate registered agent, and you'll get a whole wide variety. And they provide a very wide range of services, from limited to registered agent accepting service of process, to all kinds of filing support, filing documents, preparing documents, notifying you documents are due. Some of them manage intellectual property. They might handle your corporation, your copyright renewals for you, or trademark renewals. So you can buy a whole bunch of services. But the one you're actually looking for, if you want to explore this option, is the registered agent service. And so you would hire them, they would gather your information, and then you would go from there. Okay, back to exemptions. Religious institutions and separate groups or corporations which form integral parts of religious institutions. So let's say we're talking about a church. That's a good bet if it's a religious institution. And there's a preschool, and there's a Christian school, and there is a senior living facility that are all part of it. But those would be separate groups or corporations which form integral parts of the institution itself. So the specific organization must be tax exempt under the IRS. No part of the organization's net income can inure to the direct benefit of any individual, not just no individual is not a member. The organization's conduct must be primarily supported by government grants or contracts, funds solicited from its own membership, congregation, or previous donors, and fees charged for services rendered. So very limited structure there. Okay, next one, educational institutions and any auxiliary associations, foundations, and support groups that are directly responsible to educational institutions. So wherever you went to school, I guarantee you someone has hit you up for money. And that would be one of the support groups, foundations, or auxiliary associations that are directly responsible to the educational institution. Now, so I'm going to set up my mom's kitchen table homeschooling company, right? Do I get to do this? Well, the curricula have to be registered with or approved by the Department of Education, either directly or by acceptance of an accreditation by an accrediting body the Department of Education recognizes. For example, many technical programs at the college level, post-secondary, are accredited by an organization called ABET, and I don't remember what that's an acronym for, but the Department of Education recognizes ABET accreditation. So you don't have to get your curriculum registered or approved by the Department of Education if you already have ABET accreditation, because that's accepted. You can't just go to Walmart and buy the homeschooling second grade book and go with that. You would have to get independent approval. Okay, hospitals and hospital foundations. The organization has to be regulated by the Department of Health or the Department of Public Welfare. So I don't know off the top of my head where cannabis fits into that. I don't particularly want to know where cannabis fits into that, but that would be an interesting question for when you have nothing to do. Whether or not a cannabis dispensary could be affiliated, regulated by the Department of Health. I have no idea, and I don't want to. So we'll just move on. Veterans organizations chartered under federal law, volunteer firemen, ambulance associations, rescue squad associations, and their auxiliaries or affiliates. Now, I'm sorry, that sounds like a whole lot like the first category, but it's a little bit different because of the volunteer nature. And that is all fundraising activities of the organization or association have to be carried out by volunteers, members, and auxiliary or affiliate thereof who receive no compensation directly or indirectly for the fundraising activities. Now, why they can't just say no paid fundraisers, fundraising people, I don't know, but that's one of the requirements for tax exemption. Now, I got to tell you, I would say a quarter of the charitable donation phone calls I get are from organizations that certainly seem to me to fit into this category, and I'm getting calls from paid solicitors. So I don't know whether they've managed to fit into somewhere else or not, but that's a significant number of the solicitations I get, telephone one. And they have a different organization for every day of the week, because there are a couple of voices I recognize, and I tell them to take me off the call list for that organization, and doggone it, if they're not back the following week, hawk on something else. All right, so I think I may have shut off my marker here. There we go. And this is the second half of the list. A public nonprofit library organization. They have to receive financial aid from state and municipal governments, and they have to file an annual fiscal report with the state library system. Now, I think you might be picking up a pattern here. Many of the entities that are exempt are entities that have to file elsewhere. Department of Education, state library system, Department of Health. So they're already being regulated in other settings. It isn't that these organizations don't have to report to anybody. It is that they report to somebody else. Senior citizen centers and nursing homes. The organization must be nonprofit and charitable, must have been granted tax exempt status under the Internal Revenue Code, and all fundraising activities must be carried out by volunteers, members, or officers who receive no compensation for the fundraising activities. Now, I have seen quite a move afoot in the last 10 years where particularly hospices have affiliated with for-profit hospitals and have suddenly lost their nonprofit status. Now, this has particularly come up for me in estates. I've had a number of estates where a nonprofit was named as a beneficiary of the estate. Only things have changed and the nonprofit is no longer a nonprofit. And so then I have to come up with a proposed substitute. And then I have to go to the Attorney General and get that substitute approved. The last one I had was a hospice in Greensburg that had sold out to a for-profit hospital. And so I really had to work kind of hard to find a nonprofit hospice to receive the particular bequest. Okay, parent-teacher associations or organizations, and those organizations must be recognized in a notarized letter from the school district in which it is located. This is actually a dichotomy because parent-teacher associations or organizations generally are approved by a national charter, but that's not what is required by the Department of Revenue or the Department of State, excuse me. They want to see a notarized letter from the school district saying, yes, we recognize this particular parent-teacher association or whatever it's called in that jurisdiction. They want a letter from the school district. This is an important distinction because there have been rival groups formed under stress circumstances where they disagree with something that's happening in the school district, and a rival organization crops up. And that's why they have to be recognized by the school district. Just because you say you're a parent-teacher organization, even if you have a charter from a national organization, does not mean that you're the one that's recognized by the school district. So that one's kind of important. Any corporation established by an act of Congress. Corporation must be required by federal law to submit annual reports of its activities to Congress, containing itemized accounts of all receipts and expenditures after being fully audited by the Department of Defense. Well, if you got to do all that, you probably don't need to create a separate form for the Commonwealth. And that's exactly the point. And finally, any charitable organization which receives gross national contributions of $25,000 or less annually, and the organization cannot compensate any person who conducts solicitations. Now, frankly, if you're only bringing in $25,000 across the nation, no paid solicitor is going to take that job because you're not going to pay them enough for that to be worth it. So that's sort of going to be moot, but it is a requirement. So we see two groups here. We see people who are reporting to other organizations, Department of Health, State Library System, Department of Ed. They're reporting elsewhere, or everything is internal. There's no outside solicitation. There are no paid solicitors. It's all internal. So that's the list of exemptions. And since it probably matters to most of your nonprofits, I thought that was worth spending a little time on. All right, so now we are to the mother lode, the IRS 990. Want you to know, GuideStar and Charity Navigator harvest 990s from the IRS and post them for public consumption. So you may think that the IRS 990 is this annoying thing you have to do, but you have no idea who's looking at it. You have to fill it out. So you should use the 990 to the best possible benefit of your organization. First of all, make it easy to read. So complete it online, use the form, prints out great. Don't type it, or for Pete's sake, don't handwrite it. That's too much work. You get lower quality and people are just not that interested in reading it when they have to work at it. Now, for each section of the 990 has, not each, that's too much. Several sections of the 990 have word limits, character limits, space limits, however it's limited. Use it all up. This is your opportunity to communicate to existing donors, potential grant people issuing grants. You have to do it anyway. So don't waste the opportunity. If you've got metrics that show what you're doing, I know when City Mission comes to speak to my church, one of the things that I distinctly remember hearing every single time, number of meals served, number of bed nights provided. Those are things that say, this is real, we are making a difference, very, very concrete. Now, you actually have several places in the 990 to speak your piece. The first one's in part 3, the statement of program service accomplishments. In that section, you're going to provide your mission statement, and you're going to provide the revenue and expenses of the top 3 or 4 programs that you do. It's 3, plus if you just really have a 4th one that's tagging really closely behind, you can do 4. But you got to do 3. Yep, you have to do 3. So it isn't enough that you only do one thing. Of course, if you only do one thing, you may still be below that $25,000 level, and that's fine. But chances are, as you've provided the initial core mission activity, you've discovered that the people who need that core mission activity also need this and also need that. And now you're doing 3 things. We're going to take a look at an example that shows how that can work very effectively. So mission statement, revenues and expenses of your top 3 or 4 programs, that's in part 3. You will be providing supplemental information on Schedule O. So in that section, you're going to be talking about how compensation is set, how conflicts of interest are handled, and the review process for the actual preparation of the Form 990. And I will tell you, people want to know that, because we went through all these big whoop-de-doo scandals, and they were valid scandals in the last millennium, about executives of nonprofits being paid, frankly, ridiculous amounts of money. And so the public is now aware of that issue. They're looking for a percentage that is distributed in service. They're looking for how much the chief executive is paid. If directors are paid, how much, how is it set? Are they just get their expenses reimbursed? People are paying attention to that. And the more you share, the more you generate the confidence that you can be trusted. Part 4 is the checklist of required schedules. Now, this is a place where you are going to display significant donations, related party transactions. That's a transparency thing. Did a member of the board of directors buy that piece of property that you accessed? What your special events were, what kind of grants you've obtained. Did you engage in lobbying? Do you have non-cash contributions? These are all going to show up in part 4. And so this is another opportunity to communicate with donors and potential donors about where your focus is, how you generate funds. And one of the weirder ones is the non-cash contributions, where someone donates a painting or a car or a piece of property, or in a lot of cases, their mineral rights. I've been mildly surprised at how many estates I've handled that have included a charitable gift of subsurface interests. So weird stuff. There are other opportunities in the 990 to show your organizational capacity and your ability to influence outcomes. You're going to report the number of volunteers, the number of employees, the number of grants given, awards, however you handle that. Details of special event revenues and expenses, your governance structures, and your policies. These are all things that help you maintain your trustworthiness among the population of donors and possible donors. You have to disclose this stuff anyway. Now, I would advise you to be on top of the number of volunteers piece of it. Not just the number of volunteers, that's relatively easy to keep your hands on. Also volunteer hours, and ideally number of volunteers, volunteer hours, and activity of those volunteer hours. If you have someone who's volunteering to provide janitorial services, that's very different from someone who's volunteering qualified time as a counselor. Okay. And if you have most of your volunteer hours going for the janitor person, that doesn't speak highly of the output of your organization. So GuideStar conducted a study of over 6,000 nonprofits. And GuideStar has a process called the Seal of Transparency. And there are 5 grades of seal that you can get, sort of like a green lead certification, but you provide a certain amount of paperwork and you get a certain amount of rating certificate. Nonprofits that earned a GuideStar Seal of Transparency, and that's any of them, from the lowest to the highest, averaged 53% more in contributions the following year compared to GuideStar organizations that didn't earn a seal. What does that say? Donors give more when they're confident that money is not being wasted and that the donations are going out the door to serve the intended people. So here's an example. Water. They have a platinum transparency certificate seal, from 2023. This is their mission statement. They're a nonprofit organization bringing clean and safe drinking water to people in developing countries. We inspire giving and empower others to fundraise for sustainable water solutions. We use local partners on the ground to build and implement the projects. Then we document every single project funded using GPS coordinates, photos, and stories from the field. So that mission statement tells you this is what we do, this is how we do it, and this is how we can prove it. So their report provided 3 metrics: cumulative total number of water projects funded, cumulative total number of people served, and cumulative total investment in water projects and water project sustainability. So what does that look like? Well, these are very dramatic graphs. You can see that they're increasing over time. Yes, it's cumulative, but we have some pretty dramatic increases from year to year. Cumulative total number of water projects funded. By 2002, they'd funded 120,784 projects. Now they have notes at the bottom. They serve economically disadvantaged people by providing clean water, hygiene, and sanitation. And the number represents all water projects funded since the charity's inception in 2006. So of course, you can't look at this and say in 2014, they did 16,000. Wow. They did. That was from 2006 to 2014, because if you thought it was 2014 and they only did 3,000 more in 2015, you'd be kind of disappointed by that. This is cumulative from 2006. Number of people served, 835,671. That's a lot of people with clean water. And the cumulative investment in water projects and water project sustainability since 2006, wow, $496,487,256. I get a really good feeling. They're telling me how much they've done, who they've served, and how much they've spent. And they have a mission statement that's clear to me. Okay, so your 990 can be doing wonderful things for you. So here's the breakdown on the type of 990 you have to file. Gross receipts normally less than or equal to 50 grand. You do a 990N or a 990, a regular 990. That's your option. Gross receipts between 200 and 500. No, gross receipts less than 200. Total assets less than 500,000. You can do an EZ or you can do a 990. Receipts of more than 200,000, assets more than 500,000, you have to do a 990. You can't take any of the short ones. And if you're a private foundation, you get a 990P. And that is the breakdown for the forms. If you are right at the line, or you anticipate being right at the line next year, gather all the information you need for the full 990 so that you're ready to do it. Get the hang of it. You can still file a short one or the N or the EZ, but get your processes in place to gather the information you need to do the 990. the full one. Okay, so the important takeaway is, got it? Keep your ducks in a row. Be on top of what you need to file, gather the data that you need to gather for the things that you need to file, be ahead of it. But the most important takeaway, I hope, for you is that your 990 is a very powerful tool for communicating who you are, what you do, and how good you are at it. So do not think of the 990 as an annoying burden, but as a wonderful opportunity to shine.
Thank you so much, Rebecca. We appreciate this very much. It's such a lot of information to process. We do have a poll for some additional classes. If you would like to take that now, it should be posting shortly. We did have a couple questions. What does national contributions mean? Does that mean contributions from outside of Pennsylvania?
Yes. Any contributions that come from anywhere in the US. Most of the, I would imagine that most of the nonprofits that are in Washington County may be affiliated with a national charity, but are in fact local. And so you're unlikely to have a lot of money from out.
I think, we agree with you totally, Rebecca, about the 990s as a development tool, and that, it is something that it's a government mandated, but to use it for your benefit, for your organization's benefit.
Yeah.
And we
if
have
you've got
seen some
15
organizations
words,
do it, and some other organizations
right,
could benefit more if they take a
yes,
little time.
if you're allowed 50 words, don't use 3, use 49.
Yeah. Here's another question. Is there an easy way to get copies of original corporate filing documents?
Yes. Well, easy is a relative term. You go to the Department of State Corporation Bureau, and on their website, one of the options is obtaining certified copies. You can download and print uncertified copies pretty readily, but if you need a certified copy for bank borrowing or anything like that, you will have to get a certified copy. They take about a month. They're not ridiculously expensive, but they do take about a month. So as with most things in life, if you can plan ahead, do.
Yes, yes. I don't know if there's any other questions, and feel free to continue to mark the poll. I wanted to thank you, Rebecca, again for the time to presenting on this particularly important topic and issue that, as we see next year, will bring about some significant changes for the annual report.
Right.
And that we want all the organizations to be compliant, of course, with the Department of State, IRS, and other governing bodies. So the next Nonprofit Leadership and Engagement Education Series will be held on Tuesday, June 11th at noon, which is entitled Developing Donor Recognition Societies, presented by Tracy Libertor from the Bradford House Historical Association and Sarah Schumacher of the Washington Health System Foundation. Thanks to all those who participated in this session today, and thanks again for the outstanding presenter. I hope you have a wonderful day.